Hello, I'm Mario Toneguzzi with Retail Insider. Joining me today is Dan Kelly, President and CEO of the Canadian Federation of Independent Business. Thanks for joining us, Dan.
Good to be with you.
Let's talk about the federal budget that just came out the other day. First of all, overall, Dan, what were your thoughts about the budget and what it means for the small business community in Canada?
Well, there were a few helpful measures in the budget, a couple of things that have been on our list for a while. But I got to tell you, my overall reaction was one of disappointment. We were really hoping that the government would have some help for small firms through the recovery phase as we move out of the emergency phase of COVID. All of the COVID support programs are ending as planned in early May. And really, I mean, businesses are left dealing with a mountain of debt, cost increases on almost every single line of their budget, and including ones that are imposed by government, and no break even on some of those costs. So yeah, some big worries.
Couple of things quickly, Dan. So the overall debt, what's the average debt of a Canadian small business right now because of the pandemic?
Yeah, the average small firm right now is saddled with $160,000 in debt that they had to take on just to get through the COVID emergency. And it's that debt that worries me, that even as restrictions have now, for the most part, been lifted, as we move into the recovery zone, many businesses are trying to outrun their debt. They're worried about, of course, rising payments that they have to make on some of this. Now, to the government's credit, they did delay the repayment dates of CEBA loans. About 60,000 of that debt that they carry is in form of a CEBA loan in most businesses. 20,000 of that is forgivable upon repayment. They now have an additional year till the end of 2023, and that money is interest free. So that's good. We were hoping, though, to raise that to 50% forgivable, which would have meant 30,000 would have been forgiven. That could be really helpful and still is high on CFIB's lobbying agenda.
Yeah. Were you surprised, in terms of the government support programs that they just dropped them? Were you expecting them to continue on?
I'm not surprised that they dropped the wage subsidy, the rent subsidy. Now, of course, they're called the hardest hit program and the tourism and hospitality program. I'm not surprised that they ended those. But I thought this was going to be the chance where they pivoted to the other program that really hasn't seen the light of day, and that's the Canada Recovery Hiring Program. Now, I do want to mention that CRHP, Canada Recovery Hiring Program, those that are viewing this program that are small business owners should know that if they still have a 10% loss in revenue, they can apply for a 50% subsidy of the wages that they pay, incremental wages that they pay to workers. And they can do that 6 months back. So the program, while it's ending, that you can't qualify after the beginning of May, you will be able to apply for previous months, 6 months back. There's a lot of business owners that are leaving money on the table. I urge them to check it out. My thought, though, was that the government would keep that program alive, recognizing that really for most businesses, the recovery started on March the 1st when most provinces across Canada removed COVID restrictions. And yet that program is ending. It's almost like COVID is entirely over, according to the federal government, yet you still, as an unvaccinated person, are not able to get on an airplane. The federal rules haven't been dismantled, provincial rules have. Yeah. So there's some mixed messages in the 2022 budget for sure.
Okay, can you talk a little bit about the government spending? Now, obviously, they're spending more money again, going into further debt, et cetera. What impact does that have eventually on small businesses?
Look, small business owners know, they've seen this movie before, that today's deficits are tomorrow's taxes. And that is what's so worrisome about the fact that federal revenues are way up, spending way up, and yet we're recording a $50 billion deficit, over a $50 billion deficit this year. And even when they project out 4 more years, there's still an $8 billion deficit, no balance as far as the eye can see. I would be more sympathetic on that front if it wasn't that every line in the government's budget was increasing in cost. I mean, we are adding new social programs galore. Many of them may have some worthwhile objectives, but I got to tell you, They haven't been fully costed. And of course, there is that new agreement between the Liberals and the NDP. Many of those proposals still haven't hit the budget.
Yeah.
And we look, at the very least, I think Canadians are owed a clear understanding of what the costs of programs are and who is going to pay for these costs before we rush right into them.
Yeah, and you mentioned, the taxation. Right now, like for the small business community, when there's a bunch of things out there, but can you tell me some of I guess the key costs that they're facing these days in terms of increases?
Yeah, look, every line of their budget is increasing, not all of them under the control of government. Look, there's a limit to what the federal government's going to do to try to lower the cost of a shipping container from Asia. That's not what we're calling on them to do. But for goodness sakes, they just jacked up the carbon tax in 4 provinces considerably. None of that money is being properly rebated back to businesses. There's a promise of something to come. CPP premiums, EI premiums will be rising, both rising at the end of this year, on top of the increase we saw in CPP for the last several years.
Yeah.
Liquor taxes just went up. The Liberals promised in the 2019 election, in their platform in 2019, that they would lower credit card processing fees. They promised it again in the 2021 budget. And here we are, 2022 budget, and all it says is there'll be more consultation. Meanwhile, they found the time to tax the banks more. So Ottawa's getting a larger chunk of bank profits. But in terms of limiting these costs that ultimately are paid to the banks in credit card processing fees, the government's stalled on that front. And we think that that's a missed opportunity to lower some of the expenses that small firms are having to deal with.
All right, let's reverse gears a little bit and talk a little on the positive side. A couple of things that the government has done in recent days. The first is the temporary foreign worker program. Maybe Dan, if you could explain what the government has done and what that impact will be.
Look, Mario, I don't have to tell you that the shortage of labor is a gripping problem facing virtually every sector of the economy, including retailers. And it's really hard to find staff, especially in rural and remote areas of Canada. Even in big cities, many businesses are struggling. And so more and more businesses have turned to foreign labor to supplement the labor force. We've just gone through this huge shift. The TFW program, though, has, over the last decade, it's really been narrowed in terms of its use, especially for lower wage employers. And the federal government, to its credit, early last week recommended that they would open it up and allow businesses of all shapes and sizes, regardless of the unemployment rate, to use up to 30% of their staff with temporary foreign workers. They used to be prohibited in terms of some occupational categories, and now those are open to be using it. So that we see as a really, really helpful measure. And it was announced early last week and then repeated again in the budget. Beyond that, Mario, the other big piece of good news is the change that the government made on the small business tax structure. You'll remember, you and I spoke about this many times. In 2017, the government really tried to screw tight the small business corporate tax rate in terms of who was able to access it. Now they've taken a new approach, and that is for businesses that are slightly larger, capital intensive businesses. If your taxable capital is between 10 and $15 million, you start to lose access to the small business corporate tax rate. We've said for years to the feds that threshold is too low. And to their credit, just this week in the budget, they announced that they were going to raise that threshold. Now you get to keep all or part of the small business corporate tax structure until you have $50 million in capital. That's a really, really big improvement and will help medium-sized businesses and those that are capital intensive in particular.
Okay. Dan, I wanted to ask you just one last question, and it's, just regarding the situation we're finding ourselves in right now. Everybody's talking about a 6th wave, Quebec, Ontario, even here in Alberta, we're seeing the numbers starting to rise. From a perspective of going forward on this, and especially when we're talking about, say, retailers, I take it that there's no way in heck that we're going to see more closures or lockdowns. You think we're we're past that?
I do. Look, I'm not suggesting that we're going to be out of restrictions altogether, but whether we would go back to capacity restrictions or lockdowns, I think the chances are reasonably low. And the reason I feel that way is that public health officials are talking very differently than they did at earlier rounds. We've ramped up vaccination rates. Yes, there is concerns about third and fourth doses and making sure that they're spread as widely as possible. But I think that, mask mandates, maybe governments may come back to that. Whether they would go down to some of the more draconian restrictions like lockdowns and capacity restrictions, not sensing that's going to happen anytime soon. And good news. But look, never say never. I've been wrong more times than I've been right in terms of predicting when COVID restrictions will be lifted. And the thing that should worry us all is the federal government has ended the COVID support, so that if there is another wave, unless the feds do decide suddenly to bring all those measures back, the budget has removed them, and we should be taking that pretty seriously.
Yeah, exactly. All right, super. Thanks, Dan, for joining us today.
Anytime.
All right, super. That was Dan Kelly, President and CEO, Canadian Federation of Independent Business. I'm Mario Toneguzzi with Retail Insider. Thanks for joining us today.